What's up, guys? I'll get straight into it. So today, 10th of May, we had CPI pretty much came in line with most estimates. But it was not a non-event. There was a lot of volatility, a lot of whipsaw, something you'll typically see whenever there's a big news event, NFP, rate decision, anything, you'll typically see one move in an initial move in a certain direction. And very, very frequently, I just see the chart reverse. Sometimes it takes different time frames. So sometimes it's almost an immediate reversal. And sometimes it takes several minutes, but you can almost always guarantee that there's a reversal. Anyway, we're going to take a look at the charts straight away. So the markets are pretty much up, on average, about 1%, maybe a little bit less. We'll get into it. The banks were down. I mean, it looks like it wasn't a big move, but actually, especially if you look at the candlesticks, it was. Let's just look at the daily. Keep it simple. Start with the S&P. So it closed up 0.5%, bit of a hammer, slightly bullish. Resistance remains the same lines. I haven't really drawn any new lines in several days. Let's say 418. Honestly, 416 is probably more of an immediate resistance, but I'm going to just say 418, just below. 418 is resistance on the S&P, and support is 404. Very simple. If you're buying or selling anywhere within this channel, I'm not going to say it's a gamble, but I would just wait for the chart, a close either below or above resistance or support. But then again, I'm not really trading the S&P, but it's probably the number one barometer out there. So that's the S&P. The Nasdaq is stronger, which is typical at the moment. Look at this, a bit of a hammer, but look, close above resistance, up 1%, strongest market out there. Resistance, honestly, I would say 330 to 335. That's a wide range, but you can see why. I mean, look over here, these three candles over here for me are slightly relevant. And also you can see here, that's why I would say 330 to 335. If you're looking to sell I would. I mean, I would have sold before anyway, to be honest, but I think you can expect a lot of resistance. To be honest, obviously I'm fundamentally bearish the markets. I don't think they deserve to be here. I think we're in a consolidation complacency period. I think this is just one giant leg lower, small consolidation. And remember, ascending is the weakest chart pattern out there. When something has just ascending after a big drop, and this is still a big drop, as soon as it loses its ascending support, and we're not there yet, you'd have to lose 310 really. Then you move all the way back down to the absolute lows, and then you flush them. Stay strategic and long term. So for all you bulls out there, I know you've got the CAC, the DAX, and all this stuff that almost was in some cases made new highs. A lot of inflation priced in there. The US markets have been overbought and have been outperforming for over a decade, maybe even 2 decades. So I think once the trend reverses, you do not want to be the last one holding the bag. But anyway, strongest market out there. So short term, maybe a bit more upside, but any day this thing can reverse on any news, any geopolitical or macro event. A bank goes down straight away, ciao. So watch out. But anyway, ascending is the weakest, but that's only when you zoom out. When you zoom in, you've got still a decent candle from today. But Thursday and Friday, we have news also. You have initial jobless claims Thursday. You also have a Fed, I think it's Fed Waller speaking. Also PPI, which in some cases is more relevant than CPI. It depends how you look at it, but there's also PPI. So tomorrow we're going to have a few big events that could move the markets just as much as today, if not more. And then on Friday, I think it's consumer sentiment, some other CPI data, but there's data all over the place. And there's also, not that it's too relevant, but the Bank of England has its interest rate decision. A lot of people look at these other banks, central banks, to see how the Fed might act. So sometimes they try to front run the Fed, the New Zealand, Australian, Canadian, the Western central banks. But we also have China's CPI tomorrow. I don't think that's a huge event, but it could be relevant. The point is, today's CPI was not the only event of the week. Okay, Dow Jones, it was red. It was basically flat, but closed red, basically flat. But you know, it was definitely the weakest, which is rare. You don't typically see the Dow Jones red and everything else sort of green. But it used to correlate completely to the S&P, but yeah, it was just weaker than the S&P. But otherwise, it still has the same chart pattern. I would just leave in the lines I've got. So resistance to the upside, 34,250. Yeah. To the upside, and support to the downside, I'm going to say 32,800-ish, you know, this zone here. So I'll leave that as it is. Again, tomorrow, you know, let's see if any of the news events change the direction, but we're pretty much in the middle of a channel for the S&P and the Dow. The Nasdaq is obviously slightly more bullish and ready to run a bit more, so we could have a slight move to the upside. Maybe the Nasdaq has to hit its targets up here, and by then the S&P will have hit its resistance, and the Dow Jones, maybe not, but maybe it would hit 34,000. See what I mean? So maybe they each hit their resistance if they move up a tiny bit more. The Russell, yeah, it was green, but it was probably the most bearish one, even more bearish than Dow Jones. Now, I don't want to keep moving this and changing. I'm going to leave it as it is. But look, we opened above the descending for the first time in forever. I mean, for the whole duration of the creation of this descending. But, you know, we closed within it. So far, still no close above the descending, despite today's slightly bullish favor. So for me, still bearish, still the weakest, still ready to go down, still probably needs the banking stocks to go down too, just to help it on its way. But resistance remains this descending line. It's got to close above it. Preferably, I'd say 176 now. You can see how many times we've hit 176 in the last couple of trading days. It's got to close above where it opened today. So a close above 176 and maybe you could run, but even then you've got a lot of resistance. Obviously this one here, 180, nice big number too. Support, well, immediate support I would say is 172. Then you've got this gap, but really, let's be honest, it's 169 to 16.7. This zone. This is where you might get a bit of buying. A close below that, and this whole thing is toast, but I think it's already toast. So for me, it's the same thing. The Russell is the weakest. The Russell that will probably lead the rest down as it cracks below here. It's gonna happen, and trust me, when it's closing below 163, you're not going to be seeing these things go up. Sorry, it's not allowed, and it's probably going to happen with the KRE as a catalyst moving down. So let's look at the banking stocks. XLF. They were red, right? Despite the slightly bullish day. And markets, you know, they started off pretty bad and they rose, and then obviously they closed where you can see. But, you know, if I just go to the 3-minute chart, you can see it sort of collapse. Well, let's look at the S&P actually. You can see this whipsaw. It was all over the place actually. But again, the only thing that really matters is the close. So XLF comes back down. It's just weaker than the markets. There was a bit of a move up towards the end of day, which doesn't surprise me too much. Sometimes I hate to throw the word manipulation out there because everyone uses it, and I don't think there is much manipulation. And you know, when things go down, they always say manipulate, and when it goes up, they stay silent. You know, when your sector goes up, you're never going to say manipulation, but when it goes down, it's manipulation. But you know, let's just say I've seen it very often. The end of day, you have a bit of a move up, let's say. But yeah. Let's go back to the daily. XLF. Sorry, that's the one out. XLF, you know, pretty bad. It was worse during the day. There was a period where it was looking pretty terrible. And that's the XLF, not the smaller ones that actually go down more. What do I think? I think yeah, the lines I have are correct. You know, resistance to the upside, obviously still 33.5-ish. Support still just above 31. This gap, yeah, okay, but really it's this low, just like the Russell. So I think we're going to crack there. Obviously, I think the KRE will crack first. I should really look at these in reverse. But anyway, I always start off with the seniors. I think tomorrow, if the market goes up a little bit more, I don't think it's going to be much. I think there's a lot more, let's say, more movement to the downside in the markets and still the banking stock. So if the markets start to move lower, then I think we could hit the absolute 31 low. Maybe not tomorrow, but I think that's coming. I don't think we're going to go all the way back up here and test this, even if the markets rally. KBE, I mean, it's just a lot weaker, isn't it? Look at this open, just like the Russell really opens at a high of day. Okay, it doesn't close at high of day, but closes pretty low. Doesn't look good. You know, can it rally? Yeah. Could it go above 34.5 if the market rallies too, with the Nasdaq, you know, testing its 330 to 333, 34, 35 zone? I don't know. I guess it could close above it, but it's just going to be some short-term move and then we'll roll over again. KRE, same. Yeah, in fact, this is really starting to look very similar. They look more similar now than they did a few days ago. But honestly, it just won't take much for another move down. And there is support. Remember, there is support on the KRE around here, but we've already been there. So if we visit a second time, it's going to be weaker support. You know, we're going to be testing it again and taking out a lot of buys. And I suppose there are some stop losses out there. There's quite a few people, I guess, who bought this drop. I don't want to be the one saying sell as things go down towards their lows, but these are the banks, you know, and there's definitely reason to worry. A lot of people saying that this is actually on purpose, you know, it's intentional that the smaller banks just get in trouble and end up getting eaten up by the bigger banks. The bigger banks get even bigger. But, you know, KRE doesn't look great, let's be honest. And this is where the market's strong and still kind of high, right? This is a big move upward towards the higher zone of this entire rally since the lows. Nasdaq even more. Okay, Dow Jones, yes, it's not the strongest one, but look how much we've moved up. I still think this is consolidation, whatever that word is, complacency. So yeah, I still think we're going to move down. So watch out for the banks. Okay, let's move to interest rates. Now, interest rates, first thing I'm going to say is the 1 year and the 30-year are just acting a little strangely. Let's say they're stronger than the middle years, but still overall, I feel like yields want to go up. Now they were smacked down today. I'm doing this video a bit late, so you can't see, but you know, they're down 2-3% at some point. Well, by the close, you can see here, let's just stay with the 1 year. So 1 year, you know, venturing towards, it wants to test 5%, but no, the news came out and bam, it gets smacked down. Why did it get smacked down? Because inflation it wasn't in line, it was a little less. So therefore, oh, inflation is less. So the rate increases aren't as necessary. So therefore, rates drop. It's a silly reaction. I think rates want to go up. If there was no news, they would just eventually creep up again. And I think they will actually reverse and go back up again. I don't know if that's necessarily going to send the markets up. You know, it's like, when rates go down, the market's supposed to go down because bonds are being bought. Well, that didn't happen today either. So sometimes the pattern doesn't hold, let's say the new pattern, which is yields up, markets up. But anyway, you know, yields were down across the board pretty much. I just want to make the point that I feel like yields want to creep up. It's just the news got in the way. So 1 year, look, still, you know, still the same resistance, 5%. Yes, short-term support is 4.6. After that, we'll see. Is there some ascending we can draw here? Yes, there is actually, but that's not really going to be worth much as soon as we venture down. Probably take 1 or 2 days to get to 4.6. And if we close below that, this thing is null and void. But anyway, I'm going to leave this in. Speaks for itself. I'm still slightly bullish yields, but recognize that in 1 or 2 days, the whole pattern could reverse. 2 year here, you can see it's weak already. Yeah, you know, I still feel like they want to go up, but look, the news events will create this distortion in the chart. Let's just see what happens. I'll let this chart play out. We crack above or close above this descending, I think we will retest 4.3 on a 2 year. 5 year is weaker. It's hard to tell where support really is here, but if we draw both lines, we're definitely covering it. Yeah, so weaker, it doesn't want to go up as much. A bit more resistance in this one. Yeah, the 5 year is probably, I think it's probably the weakest chart. If I look at the 10 year, it's not as weak, but it's, just by a few millimeters. Small channel here, so resistance still at 4.65-ish. Yeah, the 5 year and the 10 year are really the weaker ones, I would say. But look, we're in the middle of the range, so I'm not going to guess which way it goes. I'll let the chart do it. But the 30 year, look at that, very strong, probably the strongest one, stronger than the 1 year, I would say. And we ventured and even closed above this 3 point, whatever you want to call it, 8.2-ish zone. So if yields creep up a little bit, the 30 year will be very quickly at 4%. And I think that will make some headlines. Yeah, so I feel like yields want to go up, but if there's a market crash, we know what happens. Bonds get bought in fear, and therefore yields go down. So it's just whipsaw, it's so hard to really predict day to day with yields more than anything else, because they can go up crazy or down crazy in a day based on different elements. I mean, they can go up because the Fed wants to raise rates, but then they can go up because the market's great, and it's a whole, I don't know, it's just really, it's pretty difficult right now. But yeah, something I can feel is that the 30 year and the 1 year are a bit special. They want to go up more than the middle years, the 2 5 10s. And I'm just gonna let the charts do the talking for me. Okay, let's go to the dollar. This was whipsaw today completely. I mean, look at the tail on the resistance and on the support, pretty much the same distance. If I go to, let's say, the 3 minute chart, look at this absolute smash, and then it makes back a lot, let's be honest, but then closes low with a lot of weakness, lower highs too. But let's see, tomorrow we'll have new events, new headlines, so then there'll be another whipsaw. We could reverse the whole thing. Well, let's just go back to the daily. Look, it's holding the support. It's spending a bit too long down here, but it's not cracking down below either. So I think I'm just going to leave these trend lines in. What it really needs to do is close above 102 point, let's say 3. And then we can move up to this zone, and then we can see maybe there's some follow-up, and obviously then you've got the 105 zone. But I think you'll have a news event where it just says, okay, no, I found my direction, and then it closes below 100.8, and then we know which way it's going to go. Otherwise, the opposite, like I just said. But if there is no news event, eventually it will do it. But for now, today was a sort of non-eventful day for the dollar. I mean, it was eventful, there was a whipsaw, but it doesn't provide any value to those who are trying to, invest based on the candlesticks of the DXY. But simply, so I don't know. There wasn't much that we can conclude from today. It was basically a sideways, flattish day. So that's what I'll say about the dollar. I thought I'd spend long on the dollar, but there you go. Copper. Here we can gather more information. So we can see a close, very low close, down 1.5%. Close at support. It's not below support. It's just above. So it's not the most bearish thing, but look, that doesn't look good. Lower highs. Look at this tail here. This time it doesn't hit. And maybe it just needs to go a little lower just to wash out a little bit of weakness, and then we can reverse. And I think it'll probably do it tomorrow. I mean, well, we'll see. It might just go sideways too, but that's weak. That's a weak chart. But fundamentally, I'm definitely more bullish copper than a lot of other assets. But that's a slightly bearish chart, but you got some support right below, so not the worst thing if it does flush. 3.7-ish, just above 3.7, and then just below that, the ascending, that should provide support. I don't see it just going down, 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 and closing below this ascending support. That would be a little unnatural. There you go. That was copper, natural gas. This natural gas just does not want to make a move in a particular direction. Middle of this channel, You know, we looked okay yesterday. We finally did bounce from this low. Now we reversed down 3.5%. Sounds like a lot. It's not too much for natural gas, but non-events, I mean, you know, we could be down at the bottom in one day, but we could also be up nearing resistance also tomorrow. So I'm just going to let the chart do the talking. I think these trend lines are correct. The only thing annoying is this wick over here almost makes me, a part of me want to put the resistance there, but I just don't see that as being valid because it was just one day, and that's why I'm leaving this here. But otherwise, I think this is correct. So let's just see what happens. And just remember, I'll zoom out just to get a bit more of a fundamental picture. Oil down 1%, nothing special. Look, we've bounced nicely from this low 60, 63-ish zone, which is based on this strategic support. So, and now we're in the middle of the channel, so it makes sense to go sideways at least, may even retrace a bit more, and then let's see, you know, let's see if we can rally a bit higher. But if you start to visit the lows again, then you may have to consider the possibility of a flush. And I know the Biden administration would like to refill the strategic petroleum reserve. Maybe they have what it takes to perform a little flush, you know, sort of time some news event, or I don't know what they want to do. You know, they can play around with charts too, but maybe they want to time a particular headline or event so that it can close below this 63 and then the algorithms do the rest for them. Then they can buy back. I don't know. That's what I would do if I was them. I would try and do it anyway. But anyway, otherwise it's you know, basically middle of the channel, nice bounce. So let's see what happens. Uranium makes sense, you know. Yeah, I wanted this one. I hesitated, didn't buy, and there you go, off it goes. I think it really was the day it closed above this descending, a bit of continuation, hit resistance here, just above 20, right on the trend line. I haven't moved these. And that's all it required. Next day, bam, up it goes. Yesterday, Tuesday, and today we've got continuation. For me, I see no problem. It could keep going. Okay, it's done quite a bit already. You may have a bit of sideways, maybe a retest of this zone here, just above 20, and then go back up and either test this horizontal or test the descending, and it maybe even coincide with both. You know, if it starts to head around this zone, it's both. But then you're testing long-term strategic descending, and then it should come back down again and test this zone if it has not already done. You know, maybe you do get something like that. I don't know. The last bit, I'm not sure, obviously, but a lot of people bullish uranium the last couple of days, and they deserve it because they held on strong. I deserve to have missed it because I was getting too greedy. And some uranium stocks did very well. CCJ, very, very good. Some juniors are finally picking up from their lows, so they suffered quite a bit. But look, not out of the woods, you know, this is not the most bullish chart, but a breakout of this descending would be pretty bullish. Anyway, good for those holding uranium. Let's look at gold and silver. Wasn't the worst day. It's a shame I'm doing the video late and you can't see the percentage move. It was basically down I don't know, 0.5%. It was nothing crazy. Let's just see. We closed there. Yeah, not even. It's like down 0.25% for gold. Silver was a bit more. Let me just calculate it very quickly. You know, 0.75. It's down 0.5% basically. So we'll get some whipsaw. Here you go. This is really the whipsaw I'm talking about. I didn't get to show it in the other charts. Look, initial reaction up. I actually prefer that the initial reaction is down now. Honestly, if I see a big event and the initial reaction, let's say the gold is down, I am actually secretly happier because I feel like it's going to reverse and actually go more in that direction. And that's what I did here. So initial reaction was up. And I knew as soon as it started to retrace, I thought, oh, how bad is this retracement going to be now? And okay, it held, right? You can see this part here, this 2030 is a bit of resistance, you know. So it bounces off resistance. This is ultra short-term resistance. I thought, okay, we're going to go back up again and scream up. No, we're not. We're going to retrace even more, which is too much of a retracement. And I knew that it was going to actually overshoot the whole thing, which it did. And then it reversed straight away. It's just such a little roller coaster. And to be honest, it held okay. And in the end, you basically end up where you started. Silver, weaker. Retraced the whole thing, didn't end up where you started. It was weaker than gold, which makes sense, you know, with if it's a red day, silver should be down more than gold and all this, but we have seen silver outperform gold for some time, so it wasn't nice to see that. And but still, you know, still it's not the worst looking chart. We're still in a handle zone. We can still create a handle. There are news events coming Thursday, Friday. And overall, when you're down not even 1%, it's not the biggest event. So you don't have to worry too much. There's no support zones that have been breached. So actually, it's fine. It's a kind of non-event day, if you know what I mean. This hasn't created a candlestick to ruin any trend. So on to the next day. Let's see what happens tomorrow. I'm going to leave it there. I think no support zones need to be drawn, no resistance. They're already there. Gold being the main barometer, and I don't want to add things that don't need to be added. It just makes it too noisy. So up, down, sideways, in the end, you end up where you started. Same with silver, just a little lower. I'm remembering that for tomorrow, because if we start to see more weakness, you could start to see silver come down, and silver, you don't want to see silver flush too much because it could go down quite a bit. And I don't think that's something to worry about just yet. And I think it depends a lot on the dollar and markets, actually, especially the banks. Okay, let's look at the GDX, GDXJ. Similarly, not a crazy day. However, there were some stocks, some silver stocks that took it in the face today. For example, EXK, Mag Silver, Fortuna Silver, Discovery Silver. I own them all. I actually got slightly slapped today in the face. And then I looked at GDX, GDXJ, gold, silver. I thought, oh, it's not actually that bad a day. But I just got a little unlucky, I think, on some of the stocks, some of the news that came out on them. My holdings were slightly heavier than normal. So I really like seeing these stocks, the ones that I own, also go down heavy. But usually it's because I don't have too much in them. But today, on all those stocks except Mag Silver, I own slightly more than I usually do. So I wasn't happy to see that smash, especially when I saw the general indexes, like I see here, you know, down not even 1%. So yeah, EXK was down 14%. I actually added a little bit because I thought it was a bit overdone, but I also recognize that these indexes could go down a lot more. So I'm definitely buying a top also. I know that. So, but anyway, that was personal portfolio management. Okay, GDX, GDXJ. First of all, nice buying off the lows. Second of all, not even down 1%, which is the same as the gold and silver. So that's okay, to be honest. And that's all I need to say. You know, look, we're still at the sort of middle of the channel. You can see that 34.50 is very, very mini support. You can see that it's hit it 3 times. I don't really need to draw it in, but it is obvious resistance, so I might as well do it. You know, bounced off it quite well. So it obviously it needs gold and silver to go up to keep going. Will it take the markets going down or the dollar going down for it to go up? Are we still going up if the market goes down? I think we are. I was watching the charts today. It's still got that sort of inverse correlation. But look, things can change on a dime too. You know, if there's absolute panic and everyone's selling everything, I don't think the miners will get away with it either. But we're not there yet. So sideways, non-event day. Sideways, nothing was breached on the downside. Nothing was breached on the upside. So all the lines I've drawn can stay. No need to spend 5 minutes talking about miners. And I'm not going to go through my miners. I will now that I've spoken about it. But look, you know, EXK smashed in the face. I feel like support is here, but I just bought a bit early in case tomorrow we actually rise, and I don't want to be too greedy on the downside. Discovery, I own too much Discovery, very weak looking chart. I didn't buy any because I already bought this low here. Definitely recognize that we can go lower. Definitely worth buying if we go and test the lows, but I won't buy until we're there. Mag Silver, I actually don't own very much. I've spoken about Mag Silver. I think every weekend I make a portfolio update, and whenever I talk about Mag Silver, I speak about how I haven't really bought much, only once on this drop, and I sold into it. So I don't mind this one being down. Fortuna was down, but that wasn't down too much. My holdings are okay. The rest were basically like the index, GDXJ. Look, Newmont unchanged, Agnico down 1%, Barrick Gold unchanged. It was basically green, Wheaton unchanged. So it's fine. It's just then you get 1 or 2 or 3 or 4 that are down 6%, and one of them 14, and then all of a sudden it's a slightly bad day when gold, silver, and the miners are down basically nothing. And that's good if you want to buy more and you don't have much, but when you have a slightly heavier than average holding, it's not ideal. So it wasn't the best day for me. My alternative stocks were fine. I'm going to quickly cover 1 or 2 large caps actually, because I've actually bought a few large caps a few days ago. So let me start with go on, CRISPR technology. I'm not into biotechs at all, but this one I've just read up on it. I don't like the company actually. Don't really love what they're doing, but I can see how they are going to become very profitable, and I think this is one of the main ones. And I actually bought this descending retest here. No, actually, I watched it here, wanted to buy it, didn't. I bought it after, bought it 55, 56, and it's just gone up, screamed up every day since. But I didn't buy much. It was my first tranche. So remember, when I buy something, I want it to go down straight away because I'm going to buy at least 4 or 5 tranches. So I'm actually very upset that this thing has just taken off ever since I bought it, 20%-ish. So I hope that well, I don't really want it to go all the way up here now. I prefer it just goes down with the markets. That would be the best case scenario. It just crashes because it's forced to because of the markets, but otherwise it would go up. That would be the best scenario. I'd buy the drop. That's one of them, CRISPR technology. Paramount, something I used to own all the way after this crash, and somehow, don't ask me how, I was trading it here a lot. I got out in the black just around 20. I think it was just below or just above 20 here. And then it kept on going. And I got annoyed that, sorry, here, I got annoyed that I didn't hold on, but I should know better. Things always go up and down more than you think. But I got out in the money despite holding it all the way down from basically high 30s. And then here, I actually put a buy in ages ago and it connected. And yeah, I was in and I added a little bit more today. I got 2 out of 5 buys, and basically I'm looking for it to flush all the way to the March lows. But otherwise, I'm in Paramount. I don't know, I think around 17 or something, nothing crazy. But yeah, I'm in it because I placed a good till cancel buy and I just forgot about it, which is quite funny. I don't really regret it. I don't know much about the companies. I don't really care. I just know it's not going bankrupt. And I know the chart looks beautiful and a bit strange. And I think I can make money out of it. So that's Paramount. I'm not going to talk about the support and resistance. You can actually see it already. Actually, this line is now irrelevant. This actually becomes another trend line and it becomes resistance. This one becomes, oops, sorry, this one becomes irrelevant. A bit of house cleaning there. But yeah, again, I feel like, the market's gone up, up, up. This one's gone down. Now the market's could go up a little bit more, but basically I see them tumbling. I do see Paramount actually going lower, but it may and should find a little bit of support here. But if it goes up, I'm not selling because I'm willing to buy a bit more and hold it for quite a while, actually, Paramount. So yeah, good buys. But it's just funny how I got in there. Alibaba. So I bought here, this zone where we are now, I bought 84 and 82, something like that. In the end, is the exact same thing. It's the difference of 10 millimeters or something, nothing. So yeah, Alibaba, I just feel like it's totally destroyed. It's the Amazon of China. China's the rising star. I just feel like it's a destroyed stock. I did actually buy it a while ago. I made videos during that period too. I think I got high 60s. Yes, I did. I bought this zone here, 65, 67, something like that. I made a video about it. And I remember selling in the high 80s. Is it 88? I think it was this, and then it kept going, right? It happens a lot with me. Meta was the worst. Meta, I sold after like 20% gain and did 100 something percent rise in the end. But whatever, I'm not going to complain. I made money. And again, it went all the way up. I sold, I watched it, but I'm kind of used to that. So I don't really care too. It happens all the time. And now look, it's back below my buy again. I remember saying I want to buy, and this one too, I had an automatic buy at the 84, I think it was, and then I bought a bit more, 82. So I'm basically in Alibaba. I don't see this zone as incredible support. By the way, that's the new zone. It is support, but I can definitely see this going lower. I want it to, and if it does, it's an even better buy. So I just need to clean up some of the technicals. But yeah, so that's Alibaba. What else should I cover? Zoom. Yes, Zoom. I added to Zoom down here. It was just a intraday bounce that I saw, and I just realized I zoomed out, no pun intended, and I saw that where we were, I was 60 something. It wasn't 50s. It was 61, 62. Is basically the low down here, right? If I go here, the start of the chart, look, the low is never even goes to the 50s. You see what I mean? So for me, I realized, wait a minute, Zoom is at absolute lows. I don't care why it's there. It's not going bankrupt in the next 1 or 2 months. So I'm going to buy it at the absolute historic lows. So I owned not much. I added a little bit more. To combine, it's still not much at all. It's 2 out of 5. But Zoom it should be today worth more than it was pre-corona. I mean, I'm using Zoom now to make this video, and I don't really care about Zoom. So to me, it is completely oversold. It's not warranted. I don't really care. This is the chart of something that's going bankrupt. It's not going bankrupt. So anyway, I added to some Zoom. Amazon have not added since I bought the lows down here. I'm really angry that it keeps going up. But anyway, I bought Alibaba, so who cares? That's kind of like my hedge to Amazon going up. I want it to go down. I want everything to go down. No, this I haven't added to. I've not added to. No, that will do. Let me cover some other large caps. So PayPal is one that I've been watching for some time. These trend lines I have not touched. So here you can see this little wedge here. We flushed support yesterday. I wanted to buy some yesterday. We did close at low of day, and I actually thought today we'd go down in the markets, but we went down in stock price despite the markets going up. So it does suggest that if the markets go down, which honestly is a 50-50, that this could go down too. So then what do? I zoom out and I look at the next support. Where are we? That's what this pink line is. Where could we find support? 60. 60. I know it's hard to see, but first of all, it's a psychological number. Second of all, I can see these little, look at all this little chop around 60. I just feel like 60 is a bit of a zone, otherwise 58. Afterwards, we've got this high here, 55, 50 to 55. But otherwise, and you don't want to hear these numbers if you're in this, but 42, 44, this gap here. I doubt we get there. That's a big drop, even though it doesn't look like it from where we are. But look, at the moment, we're closing way below support at low of day with the market going up. So PayPal should go lower. I don't see any news coming in to save it. But for me, 60. You could go to 58, 60. I think that should be a zone of buying. But again, you've got to be looking at the Nasdaq as you're trading PayPal. You've got to be looking at the KRE. If I was trading just PayPal and I didn't own any other stocks and didn't care about anything, I'd look at the Nasdaq, the KRE, PayPal, and I don't know if I should be looking at interest rates or the dollar. Maybe not. That would just be noise. Maybe if one of these news events are coming up, but that's, yeah, you have to take a look at the Nasdaq and the banks, because the banks start going down, that will bring down the markets, and if the Nasdaq goes down, PayPal will go down. But yeah, you could see a period very soon where PayPal is up even if the market's down, and that would be probably a good buy. But again, you know, it's only just started to flush, so if you do have a move up, prior support should become resistance, so watch out with 66-ish being a bit of resistance. And if we do go above, then 70, and by 70 I mean just below 70. Look at this, 60. I would sell 69.49 just to be sure, and then after that the gap fill, and after that the high before the drop. That's my machine gun out if I was really short-term trading, you know. So for example, I would sell support just below, I would sell just below the high of day of this candle, I would sell the gap, and I would sell just below this high here, 76, if you know what I mean. Anyway, that's PayPal. What else? What else? You know, I will leave it there because it's quite late. I'm sure I've forgotten a stock. I will do another video. I mean, with Thursday tomorrow. I haven't done large caps in a while. I just felt like doing them. Yeah, sorry, it's a long video. I just went all over the place. All right, I'll do another video tomorrow. Good luck tomorrow.